Uniswap V3 changed the game with concentrated liquidity, letting you supercharge your earnings by choosing specific price ranges. So in this video, I will show you how to build a liquidity pool using Ethereum and USDC as an example with three powerful strategies: 100% Ethereum, 100% US dollar, and a balanced 50-50 split. These strategies aren't just limited to Ethereum and US dollar, you can adapt them for any token pair. Whether you are bullish, bearish, or playing it safe, I will break it down step by step so you can start earning fees like a pro. Let's dive in. So the first thing you have to do is look to your wallet, look to your holdings, and choose which strategy you would like to use based on market cycle, based your own analysis. I'm here giving you this example with Ethereum and USDT or USDC. It depends which stablecoin are you going to use and which blockchain. So let's first understand how the liquidity pool on Uniswap V3 works. So Uniswap V3 allows me to enter in the liquidity pool with different price ranges with concentrated liquidity, different from Uniswap V2 that only allowed me to use 50-50 of my holdings, like 50% Ethereum and 50% dollar. And the liquidity would automatically adjust to be always 50-50 in each token that you entered the pool. In Uniswap V3, I'm giving the first example and the first strategy entering with 100% Ethereum. So if you enter the liquidity pool with only Ethereum, you are essentially betting that the price of Ethereum relative to the dollar will increase, and you want to allocate your liquidity within a narrow price range above the current price. This works well if you believe Ethereum's price will rise, as your liquidity will mostly remain in Ethereum and benefit from price appreciation. For example, now that Ethereum just broke out the $4,000 wall, you could concentrate your liquidity to the high. Let's say you have a bunch of Ethereum in your wallet and you'd like to take profits on your position. So in this case, I would start a liquidity pool here with 100% Ethereum, as I explained before. So entering 100% ETH, you would bet that the price of it would appreciate. Then, when the price starts to appreciate for the dollar, my liquidity pool will transform all the tokens in US dollar, and you would be 100% US dollar. So my liquidity pool, my range price would be like that, something like that. And then as soon as the price starts to come here, I would be 100% US dollar. So if I think that Ethereum is going to, let's say, $6,500, I would build my liquidity pool entering 100% Ethereum here. And as soon as the price starts to appreciate and enter my price range liquidity, the liquidity pool would automatically exchange my ETH for dollar. So the second strategy is entering with 100% USDC. Providing liquidity with only USDC is like positioning yourself to earn fees while holding a stable asset. This works well if you think Ethereum might decrease in price and want to provide liquidity below the current price range. So for example, now I think that the market is going to dump hard and I think Ethereum is going to go back to $3,000. Okay? So in this case, I would enter 100% USDC here. Let's say I have a bunch of USDC in my wallet, and now I want to convert this USD to Ethereum because I think Ethereum is going to reach $3,000 again. This is only an example. I don't think Ethereum is going to go back to 3,000 now, maybe in the next bear market, but I think that as soon as Ethereum breach the 4,000 area and consolidate here, we are going much higher. See my latest videos where I show you my targets for Ethereum in 2025. So if I think Ethereum is going to dump to $3,000, I enter the liquidity pool here with 100% USD, and as soon as price start to drop, I will be 100% Ethereum. So in this way, I did a DCA, dollar cost average, in my Ethereum. And I can say that the first strategy as well, we were doing a DCA out. And now we are doing a DCA in this asset, transforming US dollar to Ethereum. So I would use this strategy only if I am bearish or neutral on Ethereum and prefer to hold mostly US dollar while earning fees in a specific price range. The third strategy, entering with 50-50 Ethereum and dollar. Well, in this strategy, when you enter with an equal split of Ethereum and dollar, you are providing liquidity across balanced price range around the current market price. So this is the most flexible strategy as it allows you to earn fees no matter which direction the price moves, as long as it stays within your selected range. For example, now Ethereum is $4,000 and I think it's gonna be in this range for a while. So let's see. Let's say that my range is gonna be from here to here. It's a very small range. I don't recommend doing very small ranges. I like to use bigger range. So let's say I'm going to start something like that. Let's say this is 50-50. Okay, I'm right in the middle of the price, and I think now for the next months the price is going to consolidate here. This is just an example. I don't think that it's going to do that, but let's say in my analysis looking for supports and resistance as like this, and taking a Fibonacci from the highest point here in this movement to the low point on this movement, I can say here that Ethereum is going to reach $5,300 someday. So in this case, I need to have exactly the same amount in the other part. So if one ETH now is $4,000 and I'm entering with one Ethereum, in the other part, I have to enter with $4,000 USD. So remember, in this case, if price goes higher, the liquidity pool will automatically transform my ETH into dollar. And if price decrease, the pool will transform the capital here in Ethereum. You are going to use this strategy when you are unsure about the price direction, but you want to earn fees from swaps in a wide price range. So it's great for beginners or those looking for a safer and balanced approach. So key takeaways. When you enter 100% Ethereum is for bullish positions with fees earned above the current price. When you enter 100% US dollar is for bearish or defensive positions with fees earned below the current price. When you enter 50-50 split between your tokens is for balanced position when you expect the price to stay within a range. Saying that, which liquidity pools are giving you the most yields? So here in DefiLlama, you can find about it. You have all kinds of yields in all kinds of projects. They are currently tracking 458 protocols on 96 chains, and that's a lot of pools, 13,247 pools. So let's say my capital is on Arbitrum, that is a layer 2 on Ethereum. I would first put here the chain Arbitrum only, because I want to stay there. The project, I'm gonna search for Uniswap V3 only, that's the one. And remember that I have Ethereum and USDC. So the main token for me here that needs to have is in this pool is USDC. If I had USDT, I would put USDT. If I had DAI, I would put DAI. And then you have to see which stablecoins are in the blockchains that you're going to use and which stablecoins do you have in your wallet. So in this case, I have USDC on my wallet on Arbitrum. So I'm going to look for USDC here. And I can see already which pools are giving me the base APY, the best base APY using USDC right now. So see here that we have Ethereum USDC 1%. Do you know when you do swaps on Uniswap, they charge you a fee for that swap. So this 1% is the fee that they are charging you for that swap. However, the TVL on this pool is very low, and I don't think this is good, and I don't like that. I prefer big TVLs because These small TVLs maybe is concentrated between very few wallets, and then as soon as one big whale of this liquidity pool take off the money, there's no more liquidity, so it's not going to accrue a lot of fees anymore. I would prefer this one. See the difference? This one has $64,000 of liquidity, and this one have $55 million of liquidity. And still we have a base APY of 158% annualized. We can see here that this base APY is using a price range more or less of 30% in price. Remember, if I would take how many percent is here, this range would have 79%. So if I would build some kind of range here with 30%, would be from the price right now to $5,000 if price appreciate, and if price decrease, I would have a price range from the actual prices to $2,700 for Ethereum. So the chosen pool for the example would be Ethereum USDC 0.05%, mainly because of the high TVL, the high volume, and the high fees generated, making a safe liquidity pool for me. And remember, Uniswap V3 is one of the biggest decentralized exchanges in the crypto world and is the one by far accruing the most fees in all dexes. Solana had a few dexes like Radium, Jupiter, Orca doing more fees than Uniswap for a period of time. But if you look into the whole year, Uniswap for sure is the most safe and the most used DEX in the whole crypto world. So then I have Uniswap open here, but I can always click in this arrow and it's going to take me to the website. So here I have the new position website in the Uniswap platform. First thing, I have to connect my wallet. I'm using a MetaMask wallet here. If you don't know how to set up a MetaMask wallet, leave a comment below. So we're going to connect your MetaMask. I'm going to choose ETH, remember, and USDC. And USDC on ARB. Then you make sure you see the Arbitrum logo here in the Ethereum and USDC that you chose. And remember that we chose the 0.05%. And you can see below here the TVLs in each fee tier. Then we are going to click continue and see here that we have the full range when I'm not choosing any price range, and the minimum is 0 and the maximum is infinity. But that's not the case. We want a custom range. So let's say I want 50-50. I would choose here 3,000 and something like 5,000 here. And then we can see in this chart that we are pretty much 50-50. If we click continue, we will add USDC. I am adding as well Ethereum. It is not on the 50-50 split, but it's close to, and I think you understand. So let's say now I would like to edit this range, and I would like to set the minimum price for the actual price now with ETH, for the maximum price that I think ETH is going to achieve in the short term, let's say 5,500 Ethereum. In this case, as you can see here, this gives me a range of 37%. If I continue, I would enter only with Ethereum. So I could say something like that. I would enter with Ethereum 100%, as I explained before. And for 100% USD, so I have to be below the actual price. Choosing the range like this, I would click continue, and now I would enter 100% USDC. Then the option you choose, you would click review. Then you would see here the strategy, the price range that you choose, how much you were depositing, and then you create, pay the fees, and that's it. Then as soon as you have your pool done, you can click here in pools, view positions, and you will see how much APR you are accruing in your liquidity pool. Do always your research about the tokens that you are choosing. I would choose only consolidated projects for the projects that I would like to hold for the long term. Liquidity pools and earning passive income on DeFi platforms is something that I do since 2021. Because of that, I wrote this ebook, Decentralized Finance DeFi, the ultimate beginner's guide to financial freedom, where I showed the best platforms like Uniswap, Aave, Aerodrome, tips for security, my perfect DeFi portfolio for this bull run. So whether you are a beginner or you have experience, this ebook absolutely will aggregate in your life. Inside you will find passive income strategy, airdrop insights, tips to secure assets, step-by-step platform guides, and some kind of insights for the future of DeFi as well. Get to know me a bit. This is a limited time offer from 29 to 19, 7-day guarantee, and you can read your ebook anywhere, anytime. The link is in the first comment below, the pinned comment in this video. You will find the link for my ebook. I hope you enjoyed the content. See you in the next video.